Hey guys, late video. I'm going to talk about LIDR. Usually I don't short too many multi-day runners. Only times I kind of really do it is if uh, we get extension past previous levels. So the previous levels of the multi-day, we'll go over Thinkorswim, but the previous levels were around 3.7, 3.5. I do like it when those levels get squeezed a good 10, 20%. Try to get some extension away from possible support on the pullbacks. Also, if you've been in my Discord or on my Patreon, I've been talking a lot about how the move got to where it was, right? Where a lot of times stocks all have the biggest pullbacks, sort of stocks that have the least amount of consolidation, right? So moves that go usually up the 1 minute 9, 1 minute 20. Overall, the more a move squeezes past key levels, the more likely a stock is to fade on the backside. If we get a nice, liquidity move, a nice book, and then, on these pullbacks, I always say that, when longing, if you're going to be longing off, say, the 1 minute 20, for example, like right here, the 1 minute 20 works best earliest in the move, right? You have to be you have to see the volume come in, you have to see a potential kind of short trap candle, you got to see the pullback, you got to see the bids on the book. And in those cases, the 1 minute 20 and even the 1 minute 50 can work really well. But as it starts pushing higher and higher, this is my old video on the fake 5-minute flag. What works on the 1 minute 22, you'll see the same bounce. You'll see the same pullback. For example, you can see this, there's a mini walk down right here, right? Lower highs, lower lows, very symmetrical. Right to the 1 minute 20. But because of the extension, because the fact that we already squeezed the levels on the daily and how aggressive the move was, it makes me very skeptical that any 1 minute 20 push will work. And then I'm looking at the book just to simply see if it's a bullish or bearish structure. And we'll go over AWIN later in this video. If you want to skip ahead halfway through this video or something, you'll see a totally different book of what, like an extremely bullish book on what you kind of need to avoid on the front side. But LIDR up here is very bearish. So we'll go over the trade. Very simple, bearish book. In the context of this chart, in the context of the squeeze, in the context of the aggression, right? Having layers and layers of ask with relatively little bids on these push-ups could be bearish, right? So we'll go over the chart really fast. Right, so let's zoom out. So here's the multi-day run. You can see some highs here, 3.25, 3.25, squeeze all the way to 4.8, right? Pretty much straight up only. You like to see it. And then here's just a 1 minute 9, 1 minute 20. 1 minute 9 is the purple line, 1 minute 20 is the green line. Straight up only, massive extension. And the volume was decent, but what's interesting, the volume wasn't too crazy. It wasn't like 1 million, 1.5 million, the fact that it's kind of hovering under a million, especially a lot of it's hovering under 500K. I also factored in, right, just because I would say it's a little more bearish than something trading 1 to 1.5 million. Isn't like a major factor, but it is, volume is important, and especially given the levels that it squeezed. I had a reason to think that this was running out of liquidity, especially once we start looking at the book, right? And then, by the way, the reason I took everything off on the 1 minute 200 right here was because on multi-day runners, I'm very skeptical of where support's going to be. They can be very choppy on support. They often find support on longer time frames. You can actually kind of see the 90 MA and the hourly kind of holding up here. So it's sometimes it's hard to know where exactly these things are going to find support. And, I'm not really looking to hold this multi-day, like a multi-day swing short, so I'm kind of looking just to play the intraday move. So we'll go over this really fast. My internet was bugging really hard. I've been having ISP issues. So my book is actually kind of all messed up early on. But here, once we started topping, you know, I said on my Discord, which you can join through the Patreon, by the way, information down below in the description, but I was like, oh, the book is turning really bearish. You know, as you start to get massive extension and low floats, a sign that you should be possibly looking to flip bearish bias after, say, an aggressive move. Could be 80, 100% move straight up. Could be intraday, could be in the pre-market. But it's often when the bids start to really thin. You'll see these little bids like push the stock up, and then the bids start to get really thin, and then a lot of asks start coming in, right? Especially when the bids start to thin up. It's really something to note. Here we got a bunch of crazy volatility. Here's the pullback to the 1 minute 20. So here's that first 1 minute 20 pullback, right? This is right here. And I got this push. I was like, oh, all the asks started around 430. So I think, you know, somewhere in the mid 420s would be a good place to put on a position. You know, I saw the ask. You can see the ask here, here. And this is where I started initially going short. They actually filled some of this 430 ask, and it just stalled. It didn't fill any of these. So we got, a lot of times you'll see asks get filled on these pushes with minimal bid follow-up. So that's good to see. And here's the push off the 1 minute 50, the 5 minute 9, right? Another push up here, and I thought, again, 0 bid follow-up. Actually, bids looking real empty to the downside. And then I just saw it stalling. Especially, I like this like initial push, mini pullback, and the second push. You can just see all the volume kind of come in right here on this big bubble. You'll often see retail traders chase, like, you'll get a 1 minute pullback and then another 1 minute push. I consider that very bearish when that push starts to stall, and I do like to short those moves. And it faded. An interesting little trade here, by the way, was also this move right here, right? A lot of times on backside, again, it's a similar concept where you get an aggressive move past lower highs. Because look at the structure here. Lower high, lower high, lower high, lower high, lower high, lower high, lower high. A lot of times when you get massive midday walk downs, the market maker will initiate the stock on the backside to kind of squeeze some of these backside shorts. Also get some people to chase. But it's very common, the more down only a stock goes midday, the more likely you're going to see, you know, unless somebody's diluting or inside dumping or some type of ulterior motive. But overall, you'll see backside moves like this. And the thing you need to know about backside moves is very similar to how aggressive the push is here. A lot of times these aggressive moves here have very little support, very little consolidation. You could kind of just think of it as a larger liquidity move. Also, considering how low the volume was, you got this low volume soak. A lot of times there's just not enough liquidity in the stock to really push past key levels. But the part I thought was interesting was here, right? You can actually kind of see an aggressive move, and then you got very clean lower highs, higher lows. Also, very clean VWAP support. Again, a lot of times on these little initiations, little fake support levels that retail likes to use. For example, VWAP. You can see the little pennant flag, whatever. And then here on this candle, this bigger volume candle, this is on the book map. Saw this in real time, but I was like, like this is on an MDR. I don't really want to touch this too much more than the trade I wanted. But they did the classic trick where aggressive move, here's the pullback. They stack a really thick ask right here. You can actually kind of see it's like 30,000 shares. They pull it back. Here's the VWAP support. Here's the VWAP support. They fill the 30,000 shares and they pull it, right? So classic little backside move. I actually thought this was a good scalp move, but actually it ended up going down like 20%. So maybe I should have just taken it. And then let's go to AWIN really fast. I didn't have shares of this as short, and I saw the long very early on, but I didn't take it because I was looking for a 1 minute 20 pullback early in the move. I actually saw this. So again, if you're part of my Discord, you heard me talk about how these quick pre-market pops and dumps could be really strong, right? Quick pre-market pop and dump. These are almost like intraday runners where and this is just speculation. You know, me and Mikey Underdog talk a lot about this, where, you know, when we have conversations together, it's like we think like it's a possible sign that somebody's accumulating some shares before, also painting some fake resistance levels before squeezing it. Just speculation, but we do know that this could be very strong, especially if, you know, decent volume starts coming in. You know, we got some increasing volume, starts reaching almost 500,000 shares a minute. And I was really looking for, you know, some type of pullback to the 1 minute 20, because I'm not a big fan of chasing pullbacks to the 1 minute 9, because 1 minute 9 pullbacks can be very risky. Sometimes you get just straight Momo. I mean, this one was insane, because I mean, imagine like longing here. This is a 100% move, right? But most trades won't work out that way. And if you're going to be longing off of bids on the book on the 1 minute 9, a lot of those will fail, right? This is obviously the ideal situation. Just go straight up. I rather see some type of chart paint, you know, maybe you know, some type of painted lower highs, and then maybe a pullback, you know, maybe swipe VWAP, tap the 1 minute 20, then push. I was ready to hit long there if the book looked really nice. But it's just, we'll look at the book on this. This is like the definition of an insanely bullish book. I just didn't want to chase the 1 minute 9. Which in this case, obviously I missed out on the long, but in other cases, you know, only using the book to trade and nothing else is not a good idea. You have to look at the context of the chart paint, the volume, also market conditions, what types of moves have been happening recently, which will come back into play later on this chart. But, you know, if you're only using the book to like, hey, long off of bids and short into ass, like, the book's not going to be useful. It's really not going to be useful. I mean, you really have to study the chart and the volume and the chart structure first, and then look at the book when you determine that the chart is giving you a type of setup that you like, and then you could use the book to kind of confirm your thesis, right? But I mean, look at this book. Look how bullish this book is. Like, let's just zoom out. Here's the beginning of the move. The book to the upside is almost completely empty. If you're ever wondering how low floats go on like 200% runs, it's not just that the float is small in its trading volume. It's a lack of orders on the book to the upside, right? Because, you know, you could have a low float trading, you know, you could have a 1 million float stock trading 3 million shares a minute, and it can straight dump straight down at market open, and at the same time, you can have one that goes, you can have a stock that trades, say, 400K per minute, go on a 100% run, right? So what's the deal? It's not necessarily big volume in a 1 million float stock means it's going up only, and small volume means it's not. In the context of the book, it makes a lot more sense where somebody, in this case, is throwing a massive amount of bids with a relatively empty order book to the upside, right? So this is that chart paint below high day, that pre-market high day. And I was hoping it would pull back to like the 1 minute 20 down here. I was hoping it would dip, maybe fill this bid. You know, think of how I short where things fill asset upside. I was hoping it would fill some bids on the 1 minute 20 to the downside and then rotate back up, preferably with bid follow-up. Because as of right here, it's kind of ambiguous, right? Just kind of like a bunch of, you know, a bunch of asks started to show up. Bids are still here, and it's kind of like, well, the pre-market structure is bullish. I consider the pre-market structure to be a potentially bullish pre-market structure. I consider the consistent increasing volume to be pretty bullish, but the book, it wasn't touching the MA. It wasn't doing a type of like undercut and rip that you often see in low floats, and the book was not really confirming bullish or bearish. So I was like, I didn't long. The only long that I thought was really interesting was actually here. There's like one ask at 575. They filled that ask. They pulled it back and stacked like 5 layers of bids. And right here, I was like, should I? This is what I call long at the top, because once you get past 6 here, because there's always going to be orders at $half, whole dollar, almost no matter what. Look how empty this book is. If you're wondering how this went to 9.7, now new asks can always come in, but in the meantime, just an empty. Like, look how empty this order, but look how bullish this is, right? There's no reason to short this at all. Like, this is one of those situations where it's like, is this high day clear out? Could it be the high day clear out that fades 40%? You have no reason to think that. Given this, you have zero reason to think that. And man, they just stacked a million layers of bids. And again, this was still on the 1 minute 9 EMA. I did not want to chase on the 1 minute 9 EMA. And then we're gonna go back to the chart here because I wanna just go over this really fast, right? So we got a big aggressive move, and then something potentially super bullish happens. It dumps from 9.7 to 6.8. It's a 30% dump in 4 minutes, 5 minutes. It's a massive dump. So what does that mean? It means that very little trading actually happened at this price range up here. And as it starts to dump, people, especially short sellers, are going to start chasing it, right? So whenever I see massive parabolics on increasing volume like this, you start getting, especially once you start getting a million shares a minute at $8-9 a share, a lot of times you'll see big high volume parabolics give huge kind of blow off moves. Could be insanely strong. So many shorts chase this, right? And what do we get here? We start getting $8 paint. We call this out in my Discord right away. $8 paint, $8 paint, $8 paint. And that's actually really interesting because I'm very skeptical, and I said this in my there's kind of conflicting factors, bearish and bullish factors on this chart, right? The main bearish factor, again, getting back to LIDR, is the up-only aggressiveness of this squeeze. This is inherently bearish. Not just the extension, not just the percent extension, but how it got extended is inherently bearish. And a lot of times, it pays to be bearish bias going into a big move like this, right? However, I was saying that I was like, hey, the problem with this chart, and you could be bearish bias, and you could short a push above 8, which we saw over here. But you want to be careful because whenever you get chart paint that is really far away, I'm talking more than 10% away from high day, especially more than, in this case, it was like 20% away, 15, 20% away from high day. The concern is that there's often, and we saw this on the book, there's often very few orders on the book up here, right? And everyone has really bad averages, mostly under 8, right? So when it starts to rotate, there's too much empty space for this to easily push through, right? So it's like it can easily go from 8 to 9.7 super quick as people get stopped out, and because of just the lack of orders on the book kind of shoving this down. So we start going into our midday consolidation, and if we remember CTNT, getting back to market conditions, CTNT had lower high paint followed by midday squeeze. So the market's telling us this is usually a pattern that doesn't work very well, by the way. Like the last 4 weeks, lower high midday paint followed by high day squeeze wasn't really happening. You weren't really seeing that type of price action. So when that type of price action comes back into the play, you have to note it. You have to know that's a changed market behavior. And again, we called this out in the Discord. I was like, there's bearish factors, there's bullish factors, but you have to consider that midday continuation worked on CTNT yesterday. It could work here. We got chart paint at $8. We could get a rotation. And I was like, when you see the push above 8, pay attention to how the bids show up. Pay attention to where the asks are being stacked. And keep in mind that if you're shorting, say, this $8 break, your average might be $8.50. High day is still at $9.75, so you want to be careful in terms of risk management. So yeah, we'll go over. You can see $8 paint here. Here's like a 7.9 lower high. More lower highs, more lower highs, more lower highs. And here's the paint. And here's the initiation. So squeezes 8, goes pretty much all the way into 9. Initially, no bids on this, and a few people in my room took this short, and I don't blame them. But this is where you could be discretionary using the book. Sometimes the book shifts. Of course, they were risking 9. They weren't risking all the way at high day. And even though there's no bids following it up on the initial push right here, we get a pullback, and then we start to get, it catches a bid here, and we start to get bid follow-up. We start to get bid follow-up. We start to get bid follow-up. And this is when, if I was short this candle, now, TradeZero had shares of this for like 80 cents a share, so I wasn't short this candle. But But when especially when you start seeing this, like the 1,850 ask gets taken out, and again, getting back to what happened earlier in this trade, where they just stacked like 4 layers of bids to shove it. I just would have got out on this rotation. Super bullish, and then it did a high day clear out and faded. So, I think some major lessons here is market conditions. Have there been midday continuation in stocks? Especially compared to yesterday, yes. CTNT, chart paint, too far away, 10, especially here, 20% away from high, too much empty space. A lot of times these aggressive moves get squeezed. And yeah, it's just one of those things where that short didn't work. And then the only thing else we talked about in the room is kind of predicting these midday, high day clearouts. How can you predict that they're going to work? I would say it's really hard to predict, but I would say one common factor is you often get an aggressive move, often like higher lows into an aggressive move that swipes the high day liquidity, right? So the more aggressive the move towards high day, the more likely the high day clearout is to work on these crazy overextended stocks. Again, not the easiest thing to read. But in this case, it worked. I mean, look, that's a 50% fade into after hours. So, but yeah, not the easiest longing off the 1-minute 9, very dangerous, even if it has a million bids. Could have did the long at the top in the mid 550s here, but I didn't take it. And then, yeah, the midday chart paint, very interesting. So, anyways, that's it for today. Sorry, I haven't done one of these, but stuff has kind of normalized here, so I should be able to do it pretty much every single day now. So information down below about the Discord, and you guys have a good one. See ya.